আমি অনুরোধ করব, বিভিন্ন কলেজের ছাত্রদের আমি অনুরোধ করব, ছাত্রছাত্রীদের তোমরা অংশগ্রহণ করো এবং তোমাদের ফিডব্যাক দাও। আমার দৃঢ় বিশ্বাস যে তোমরা যদি এটা অ্যাটেন্ড করো ঠিক মতো, তাহলে তোমাদের আগামী যে পরীক্ষার দিনগুলো, তাতে তোমরা অনেকটা নিজেদের প্রিপারেশনকে মজবুত করতে পারবে এবং খুব ভালোভাবে তোমরা পরীক্ষা দিতে পারবে। তোমাদের সকলের জন্যে আমাদের সোসাইটির পক্ষ থেকে আমি গুড উইশেস জানাই। গুড লাক টু অল অফ ইউ, বেস্ট অফ লাক টু অল অফ ইউ। অ্যান্ড তোমরা এই 2 সপ্তাহ ধরে আমি মনে করি আমাদের যে রিসোর্স পার্সনরা আছে তাদের সঙ্গে সহযোগিতা করবে এবং তাদের কাছ থেকে যতটা সম্ভব তোমরা জেনে নেবে, জানার চেষ্টা করবে, এবং তাতে তোমাদের সকলেরই যেমন ভালো হবে। আমি মনে করি যে আমাদের সারা দেশে, বিশেষ করে আমাদের পশ্চিমবাংলার, যেটাকে আমরা একাডেমিক অ্যাডভান্সমেন্ট বলি, সেদিকেও এক ধাপ আমরা এগিয়ে যাব, এই বিশ্বাস রেখে সকলকে শুভেচ্ছা জানিয়ে আজকের ইনঅগারাল সেশন শেষ করছি এবং টেকনিক্যাল সেশনের জন্য সৌম্যকে অনুরোধ জানাচ্ছি। থ্যাঙ্কস টু অল অফ ইউ। এবার আমরা ছাড়ি।
থ্যাংক ইউ স্যার, থ্যাংক ইউ।
উই আর লিভিং নাও। বলো
স্যার, আপনি ওই রৌনক ডে 1 যেটা আমাদের স্যার সৌম্য স্যার ইন্ট্রোডাকশনটা তুমি দিয়ে দিও। রৌনক ইজ গোইং টু গিভ দ্য ইন্ট্রোডাকশন।
হ্যাঁ, আলাদা লিঙ্ক তো, তোমরা এখান থেকে তো বেরিয়ে যেতে হবে। ঠিক আছে, ঠিক, ওই আর লিভিং। আচ্ছা, ওকে।
লাইভ হয়েছে মনে হয়, স্টার্ট দিয়েছে রৌনক। লাইভ শুরু হয়েছে।
স্যার লাইভটা স্টার্ট হয়েছে, একবার আপনি একটু চেক করে নিন না। আমার
আমি করছি। হ্যাঁ, লাইভ শুরু হয়ে গেছে।
হ্যাঁ স্যার, আমার ভয়েসটা লাইভে আসছে তো?
না, এখন আসছে না।
একটুখানি স্যার দেখেন।
না, আসেনি। হ্যাঁ, এসছে তো। হ্যাঁ,
ওকে স্যার, তাহলে আমি সৌম্য মুখার্জি স্যারকে বলি। Professor Soumya Mukherjee sir is an assistant professor in the Department of Commerce, Maharaja Manindra Chandra College, University of Calcutta. He is also associated with the Department of Commerce, University of Calcutta, and many other institutions in various capacities. He has completed his graduation and post-graduation studies from the Department of Commerce, University of Calcutta. He has been a silver medalist from Goenka College of Commerce and Business Administration and was also placed in the university merit list at the postgraduate level. He has also completed his MPhil from the said university. He has acted as a principal investigator in a UGC sponsored minor research project. Presently, he is pursuing his doctoral studies from the Department of Commerce, University of Calcutta. He has contributed in many journals and presented papers in different seminars at national level. Moreover, he has contributed in many peer-reviewed journals at national level. He has also worked as a reviewer of various national and international books. His areas of research interest include earning management, financial services, accounting standards, bank risk management.
Thank you, Ronak. Thank you very much for such a warm welcome to me. I'm really thankful to the entire society, to the president, to the secretary for providing me the opportunity to interact with the students and specifically for the students of our university and different universities. Just a minute. I hope my screen is clear to all of you. Yeah. So what the plan that I have for today's class? It's a 2 hours lecture, as we know. So I am planning to cover up major portions of the financial statements. What the topic that I will cover today? At first, I want to discuss the question structure of our university. This is point number 1, the syllabus and question structure. Because students, when facing the questions in the examinations, what are the options are available in different chapters that they have to know at first. And after that, I am coming to one of the most important chapter for semester 5 students. That is the overview of the corporate financial statements. I'm selecting this title. The reason is that all the chapters of the corporate accounting and any chapters in next semester, that is the in semester 6, financial statement analysis, they have to understand what is financial statements, how the financial statements has been prepared. Otherwise, it's not possible for the students to deal with different kinds of problems relating to the entire subject. What I will cover: what is concept of corporate financial statement, what are the different types of corporate financial statement, what are the components of the corporate financial statement, pro forma of different components of corporate financial statement, and procedure of drafting corporate financial statements. Now, out of the different components of financial statement, I will emphasize only on the profit and loss statement of profit and loss and balance sheet and related notes. I am just excluding other portions in detail because that was not in the syllabus of semester 5. Okay. So I am coming to the question structure and the syllabus. Now, students, that you can understand that this is DSC paper. Those who are taking the specializations in the accounting and finance, for sake of them, there are 6 units. First of all, there are 6 units. Company introduction and accounting for shares and debentures. This is the first unit. And you that there are different sub-chapters, and 20 marks has been allotted for this unit. Okay. Second, buyback and redemption of preference shares. Now, there are 2 items. One is redemption of preference shares. Second one is the buyback of shares and securities. And this portion will also be covered in the subsequent classes. Okay. The unit 3, which I want to give the overview. I want to give the introductions. That is the company final accounts, overview of corporate financial statements, and drafting of the statement of PL and balance sheet. 15 marks has been allotted for this group. Unit 4, redemptions of debentures. 10 marks has been allotted for this group. Unit 5, valuations relating to goodwill and shares. 10 marks has been allotted for this group. And last one, company merger and reconstructions. 15 marks has been allotted for this group. Total, you can see 20 plus 10, 30, 30 plus 15, 45 plus 10, 55 plus 10, 65 plus 15, 80 marks has been allotted. Okay. Now, if you see the question structure, there are 2 groups. In group A, you have to attend 5 questions. In group B, you have to attend 2 questions. Now, 5 questions, additional 3 internal choices will be there. Okay. And in group B, 2 questions are to be attempted. Additional 1 internal choice will be there. Now, in group A, each question will carry 10 marks. And group B, each question will carry 15 marks. Total 50 plus 30, 80 marks. This is the question structure. And I just want to share my opinion relating to my past experience, that in group A, 2 questions will come from unit 1, 1 question from unit 2, 1 question from unit 4, 1 question from valuations, that is unit 5. This number 3, that is the company final accounts and the company mergers and acquisitions. From this chapter, the questions will be set in group B. Okay. So this is the first question structure and the syllabus. I hope this portion is clear. Now, students, I want to share one more thing, that from the company final accounts, the question will be set in semester 5. That is a compulsory question. Okay. You will not get any choice from this, I hope. Okay. So you have to give most important you have to devote your time for this chapter. Okay. Now I'm just coming to discussions of the first thing. That is the overview of corporate financial statement. This is the overview. I'm just going to start this one, overview. Now, if you go through the term corporate financial statements, before that, I just want to introduce that. What is accounting? Accounting happens to be the language of an entity through which it communicates the various financial transactions and related events occurring during an accounting period to its various stakeholders. So I repeat the points. What is accounting? It's happened to be a language of entity through which it communicates the various financial transactions and related events occurring during an accounting period to its various stakeholders, like equity shareholders, like preference shareholders, like government, not only the shareholders, like debenture holders, like creditors, like researchers, etc. The medium that is used for the purpose of such communications happens to be the financial statements. How they are communicating to the stakeholders? They are communicating the accounting informations to its stakeholders through the financial statement. So financial statements happens to be the interface between the company and its stakeholders. So if it's a company and different stakeholders are there, who will interact between them? The financial statement will interact between them. The primary purpose of drafting financial statement is to communicate the various aspects of financial performance and financial position of a company during a particular accounting period to its different stakeholders. If you have already did your semester 1 examinations, in semester 1 you have drafted the final accounts of a sole proprietorship concern. You are drafting trading profit and loss balance sheet. If it's a manufacturing concern, you are drafting the manufacturing account. Now, manufacturing account depicts the manufacturing cost of the concern, whereas trading and profit and loss shows the financial performance. What's the positions of your gross profit? What's the positions of your net profit? But in case of a company, the financial performance has been depicted by the statement of profit and loss. That part I'm coming to later on. And the financial positions as usually reflected by the balance sheet of the concern. Now, the matter is that the definitions of the financial statement has been given in the Companies Act 2013. And the definition is inclusive definitions of the said terms. Now, there are 5 items. First one is the balance sheet. Second one is the profit and loss account. Or income and expenditure account. Yes. In case of a company, in certain cases, you have to draft the income and expenditure account. If the company is not, if the company does not have a motive to carry the profit, cash flow statement, statement of changes in equity, and the explanatory notes of the 4 items. That is explanatory note of the balance sheet, explanatory note of the profit and loss, explanatory note of the cash flow statement, explanatory note of the statement of changes in equity. I'm talking about the Companies Act 2013. This has been mentioned in the section 2, subsection 40. Okay, so financial statement includes 5 components. First one, I'm repeat, balance sheet. Second one, profit and loss. Third one, cash flow statement. Fourth one, changes in equity. And last one, explanatory notes. These 5 statements, you have to know. These 5 statements you have to know. These are the 5 statements. These are the 5 statements. I hope these 5 statements are clear. These are the 5 statements. Now, if you see, some of the students it's known to some of the students that said profit and loss account has not been drafted in case of a company. They are drafting the statement of profit and loss. No, you just see, as per the section 2, subsection 40 has mentioned PL account. So, sir, from where we can learn the word statement of profit and loss? It has been mentioned in the schedule. It has been mentioned in the schedule. Actually, reflection of true and fair view of the state of affairs of the company as per the section 129 of the Companies Act 2013. Here, they have provided that how to prepare the financial statements. It provides the financial statement should give a true and fair view of the state of affairs of the company and shall comply with the accounting standard notified under sections 133. It is also provided that the financial statements shall be prepared in form provided in Schedule 3 of the Companies Act 2013. Schedule 3. Now, so while drafting the financial statement, while preparing the financial statement, you have to know many things. Number 1, Companies Act. Number 2, accounting standards. And number 3, the Schedule 3. These 3 things are to be learned before drawing any financial statement of company. Now, sir, what is schedule? What is the Schedule 3 of the Companies Act 2013? This is nothing but an appendix to the Companies Act 2013, which provides the form and the manner in which every company registered under the Companies Act 2013 is required to draft the balance sheet, statement of profit and loss, and associate notes to accounts. So, while drafting the financial statement, out of the 5 financial statements, that is the balance sheet, PL, cash flow, statement of changes in equity, explanatory notes, these three, balance sheet, PL account, explanatory notes, this has been mentioned in the Schedule 3. Now, Schedule 3 has 2 parts, Part 1, Part 2. Part 1, which provides the minimum disclosure requirement of the balance sheet, and Part 2, that provides the minimum disclosure requirement of the statement of profit and loss. I'm focusing on the what minimum disclosure requirement. That means whatever the pro forma has been given in the Schedule 3 of the Companies Act 2013, this is not exhaustive. It may happen that certain events, certain items are to be added if the company thinks this is essential. If the company thinks this is essential for the stakeholders, for the presentations, for communications to the different stakeholders. Now, if I am talking about the scope of the Schedule 3, it applies to all companies except banking, insurance, and electricity. These 3 types of companies are out of the purview of the Schedule 3. Now, what is the purpose? Schedule 3 set out the minimum requirement, for disclosure of the face of the balance sheet and statement of profit and loss. It provides general instruction for preparations of balance sheet and statement of profit and loss. So, how you are preparing your financial statement, basically, if this is related to your balance sheet, related to your statement of PL, will follow Schedule 3. Now, sir, then cash flow statement. If we're doing the cash flow statement, we have to follow certain accounting standards. If the company is following accounting standards, it is 3. If the company is following Indian accounting standards, it's in 7. Okay. Pro forma of changes in equity has been mentioned in the Companies Act itself. No schedule has been mentioned for that. And explanatory notes. It is related to balance sheet. It may be related to PL. It may be related to cash flow statement. It may be related to statement of changes in equity. Now, next point that I want to come, that is the types of corporate financial statement. Now, students, while discussing types of anything, you have to understand on what basis you are going to classify it. In case of a corporate financial statement, on the basis of scope of coverage, the corporate financial statement can be classified into 2 categories. Number 1, stand-alone financial statement. These are the financial statement of an individual company. I am using the word stand-alone. So it is applicable for individual. The stand-alone financial statement includes stand-alone balance sheet, stand-alone SPL, stand-alone cash flow statements, and its associated notes. So this is very much clear that in case of an individual company, X Limited, Y Limited, I'm talking about Mindtree, I'm talking about Tata Motors, I'm talking about Infosys. Okay, if you're talking about any particular company, you have to draft the stand-alone financial statement. our focus for semester 5 will be on standalone financial statement. I'm just adding another words, consolidated financial statement. These are the financial statement of a group companies, that is holding company and its subsidiary or associated company, etc. The consolidated financial statement includes consolidated balance sheet, consolidated statement of PL, and consolidated cash flow statement and associated notes to accounts. So this is very much clear. There are two types of financial statement which I am going to classify on the basis of scope of coverage. If you are thinking about a single company, then it's a standalone. If you are thinking about our group companies, it's a consolidated financial statement. This consolidated financial statement that you will cover in semester 6. You will cover in semester 6. Okay. Now I'm coming to the different components of financial statements. Different components. Just take an idea of these things. Just take an idea. Different components. As I discussed that from the definitions of the Companies Act 2013, section 2, subsection 40, there are 5 components. The first component is the balance sheet. Now, what you have to draft, what you have to do, or what is balance sheet? You already did it in your semester 1. It's nothing but a statement of the financial positions. It discloses the financial positions of a company at the end of the accounting year or financial year, and hence is also sometimes referred to as statement of financial positions. This is nothing but a point statement. I'm using the word point statement because while you are drawing the balance sheet, you are drafting the balance sheet, you are writing balance sheet as on, balance sheet as at. Sheet reflects the financial positions on a particular date. So whatever the transactions that happened during the year, that has not been detailed in the balance sheet, rather it shows the positions on which date you are drafting your annual reports. In case of a corporate balance sheet, in case of a company, it shows 3 items. Number 1, assets. Number 2, liabilities. And number 3, equity. Assets means that is a resource owned and controlled by the company. Liabilities, that is the external claim of the assets. You are running your business with a 10 lakhs capital from the fund which you have collected from shareholders. But you need 15 lakhs to run your business. You further collected 5 lakhs by issuing debentures. You further collected 5 lakhs by issuing debentures. So this 5 lakh is the external claims of the assets. And the last one is the equity. That is the owner's capital and the internally generated capital. Now, the pro forma of balance sheet has been mentioned in the part 1 of Schedule 3 of Companies Act 2013. Part 1, Schedule 3. Next, I'm coming to statement of profit and loss. It's an income statement of the company. It shows the operating result of the company. The main objective of drafting this statement is to report the operating result of the company or entity. It is a period statement as it reflects the result of the transactions involved over a period of time. It may be for a quarter, it may be for a half year, and in many cases it may be for a year. So the basic difference between balance sheet and statement of PL is that balance sheet has been drafted on a particular point of time. It reflects the financial positions of a particular point. But statement of PL reflects the financial performance of a company for a period. The pro forma of statement of PL of a company is provided under Part 2 of Schedule 3 of Companies Act 2013. So, students, I just I just need your attentions here. Balance sheets Part 1, statement of PL Part 2. Just try to memorize this thing, these two things. Your Schedule 3, Part 1 depicts the pro forma of balance sheet. Usually it is happened that the students are drafting the balance sheet later before the drafting the PL. But if somebody asks you the question that which part of Schedule 3 shows balance sheets, shows the pro forma of balance sheets, your answer will be Part 1. And in case of statement of profit and loss, it should be Part 2. Next point is the cash flow statement, third one. I am just getting a brief idea of these things. It provides the detailed information of cash inflows and outflows. The financial statement provides the inflows and outflows of cash and cash equivalent during a specified period of time. The same period is used for the income statement. That means you are drafting your financial statement of profit and loss for a year. Then the same year will be followed for the cash flow statement as well. It is nothing but the linking between two balance sheets. This financial statement supplements the information provided by the income statement as both link consecutive balance sheet. Now, cash flow statements segregate all cash inflows and outflows in three activities: operating activities, investing activities, and financing activities. Many of you has learned this in your class 12, and you have to do this in the next semester 6. You have to go through in details the cash flow statement. Pro forma, I'm talking about the pro forma, no schedule. Rather, as I told you, AS3 revised, or if the company is following Ind AS, it's Ind AS 7 as applicable for the company. Next part that I am coming, what is statement of changes in equity? Statement of changes in equity. The statement of changes in equity basically is a financial statement that reports the changes in company share capital, accumulated reserves, and return earning over a period. So there are different components of equity. It may be equity share capital, it may be reserves and surplus, it may be under reserve surplus, it may be statement of PL, it may be general reserve, it may be statement of it may be securities premium. Okay. So basically what the statement of changes in equity showing, they are, as the name suggests, they are showing the changes. Why the opening balance or closing balance are different. Suppose you are issuing your shares for 5 lakhs, opening balance of share capital is 1 lakh. So 1 lakh and 5 lakh, that figures comes to you 6 lakhs. So why this 6 lakhs? Due to the issue of shares. If the share capital has been reduced, it may be on account of redemption of prep shares, it may be on account of buyback of securities. Okay, so they have to identify the reason that has been shown in the statement of changes in equity. Basically, it shows the movement in various equity accounts. The financial statement explains the movement in various equity accounts, namely equity share capital, securities premium, general reserve, profit and loss, various account reflecting capital reserve, debentures redemption reserve, capital redemptions reserve, revaluations reserve, etc. Okay. The last part that I'm coming to regarding the components of financial statement is the notes to accounts. Now, what is notes to accounts? Just a minute. Excuse me. It's the integral components of financial statement. This forms an integral component of the financial statement. Actually, in the balance sheet, in the SPL, in the cash flow statement, in the face of the balance sheet, rather, in the face of the SPL, we are just depicting the figure. Now, how does this figure come? We need a cross-reference. Now, this cross-reference to any related information through the notes to accounts. The items appearing on the face of the financial statements are cross-reference to any information through the notes to accounts. It helps the explanations on the preparations of financial statement. For example, I am changing the valuation of my inventory. Why are you changing the valuations? I'm changing the method of my depreciations. Why? For what reason you are changing? I'm revaluing my assets. Is there any cause besides which, for which you are doing your revaluations? That has been reflected in the notes to accounts. They provide explanations on the preparations of financial statement, present additional information about the items included in the financial statement. Treatment of major elements of financial statement. These aggregations of items recognized in financial statement. Informations about items that do not qualify for such recognition and statutorily required disclosure. So this is clear that the notes to accounts are nothing but the supportive documents on the basis of which you are drafting your financial statements. You have to prepare separate notes to accounts for each components of financial statements. That means notes to balance sheet, notes to cash flow statement, notes to statement of profit and loss that you are going to draft. Now, students, regarding this, what my advice, due to my past experience, what I saw, few notes to accounts are supposed to be drafted while giving your examinations in semester 5. Specifically, notes to reserves and surplus, number 1. Notes to share capital, number 2. These two notes are mandatory. And one more point that I want to add for your examination, that if any particular notes which showing many detailed informations based upon the questions set by the examiner, that notes are also to be drafted. Suppose you saw that the revaluations of assets, purchase and sale of assets in the adjustments are given. You have to draft the notes on property, plant and equipment and tangible assets. Okay. So my point is that it's not possible for you to complete all the notes to accounts related to a question set in the examinations. At least few notes are to be drafted. I'm highlighting on share capital. I'm highlighting on reserves and surplus and any other items which have a many disclosure items. That notes are to be drafted. Now, next point that I am coming, that is the pro forma financial statements. And students, first I'm coming to the balance sheet. This is the balance sheet. Now, if you see the balance sheet, you just go through the balance sheets. This is the balance sheet. As I told you, balance sheet is a financial statement which reports the major classes of the amount of assets, liabilities, and equity, and interrelationship between these items at the end of the financial year. So it's a point statement. I am mentioning it once again. The salient features and pro forma of balance sheet drafted as per the part 1 of Schedule 3 of the Companies Act 2013. Basically, balance sheet, you see the pro forma, you can understand that it has been drafted in two broad tiers, upper tier and lower tier. In the upper tier, you are showing equity and liabilities. In the lower tier, you are showing assets. No, previous practice was there. The balance sheet has been drafted in the left-hand side and right-hand side. No, you just see number 1, equity and liabilities, and number 2, assets. I hope this point is clear to all of you. This point is clear. Equity and liabilities. These two tiers, upper tier equity liabilities, lower tier assets. These two tiers. Now, if you go through the balance sheets, what you can understand that the first tier is known as the equity liabilities. What is equity liabilities? The owner's capital and internally generated capital of the company, that is equity. Also the claims of external parties of the assets and the company, liabilities. So first equity, second liability. The second tier is the asset. If you see the asset tier, you can understand that there are no such subclassifications. That is only the assets. It has been again divided into different heads, but it does not necessarily mean that the assets of the equity shareholders, asset of the debenture holders, like this. Whereas in the equity liabilities tier, there are two parts. First equity, second one is the liability. Now, if you see the heading of the balance sheet, just see in the heading appear under each tier of the balance sheet. So upper tier, that means the equity liabilities tier. You just see there are 4 heads. Number 1, shareholders fund. Number 2, share applications money pending allotment. Number 3, non-current liabilities. And the 4th one is the current liabilities. And in the asset tier, there are two heads. Number one, non-current assets. Number two, current assets. Number one, non-current, and number two, current assets. Next, you have to memorize the entire items of balance sheet. Now, how to memorize this? I just tell you one thing. Now, while reading this balance sheet, first you have to match up. How you can match up the equity liabilities tier with the asset tier, and equity liability you have to match with the non-current liability with the current liability. In many cases, non-current liabilities have to be matched to remember the items of the non-current assets, and many cases the current liabilities have to be matched the current items of current assets of the balance sheet. Okay. Now you just try to understand that. First one is the shareholders fund. This is your shareholders fund. Now under shareholders funds, this is the head. Now there are three heads, just check. First one, share capital. Second one, reserve surplus. Third one, money received against share warrant. Now students, for sake of your BCom examination, these 2 points are very vital. These 2 points are very, very vital. You have to recall this. Share capital, reserves and surplus. Okay. Number second heading was share applications money pending allotment. You may omit this item, okay, for sake of your examinations. Now, non-current liabilities, you just see there are 4 subheads: long-term borrowing, deferred tax liabilities, other long-term liabilities, long-term provisions. Current liabilities, there are 4 subheads: short-term borrowings, trade payables, other current liabilities, short-term provisions. These are the 4. If you see the asset tier of the balance sheet, there are 2 heads: non-current assets and current assets. In non-current assets, it is starting with the property, plant and equipment. This name has been replaced on 11th October 2019. 11th October 2019 by the Ministry of Corporate Affairs. We should not use the term fixed assets right now. Instead of that, we have to follow the property, plant and equipments. Okay. Now, subheads are, there are 5 subheads under non-current assets. First one, property, plant and equipment, non-current investment, deferred tax asset, long-term loans and advances, other current assets. Under property, plant and equipment subheads, there are 4 line items: tangible assets, intangible assets, capital work in progress, intangibles under development. In current assets, there are 6 items, 6 subheads rather: current investment, inventories, trade receivables, cash and cash equivalent, short-term loans and advances, other current assets. Now students, how to remember these things? This is important. Now just see, if the long-term borrowings is coming under non-current liabilities, automatically short-term borrowings will come under current liabilities. This is point number 1. What I am telling you, if the long-term borrowing is coming under non-current liabilities, short-term borrowings will come under current liabilities. This is the first point that I want to highlight. Second, under current liabilities, you just check. Here is the trade payables. So, trade receivable will come under current assets. Next one. Third, you have mentioned other long-term liabilities. So, other current liabilities will come under current liabilities. You have to match up this. Long-term provision is coming here. So, the short-term provisions will come in under current liabilities. Deferred tax liabilities is coming in non-current liabilities. So, deferred tax asset will come in the asset portions in the non-current assets. This way you have to remember all these things. Okay. So, you have to make a matching. You have to make a matching between these things so that you can recall the items. Now I'm coming to statement of profit and loss. I'm coming to statement of profit and loss. Next point. In statement of profit and loss, you just see, it is to be prepared under vertical format. In the right hand side, like the balance sheet, there are two figures, one for the current year figure, one for the preceding year's figure. First one is the revenue from operations. Second one is the other income. First one is the revenue. Am I audible to all? Just a minute, students.
Yes, yes.
Hello.
Yes, audible.
Hello. My voice clear?
Yes, yes.
Yeah. Now I'm coming to the statement of PL. You just see in the right hand side there are two columns. In the first column it's the current reporting period. In the second column it's the previous year's reporting period. If you see, first you have to know what are the different sources of revenue. What is your core operations? That is the revenue from operations. I will explain it later on. After that, other income. By adding this two, you will get the total revenue figure. In the expenses, you just see it is starting from the cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress and stock in trade, employees benefit expenses, finance cost, depreciation and amortizations, other expenses. These are the total expenses. So total revenue and total expenses. If you compare your total revenue with total expenses, then you will get the profit before exceptional, extraordinary items and tax. Okay. Now, one point is coming into my mind that, sir, you are talking first, we have to write the cost of materials consumed. Sir, cost of materials consumed, it means opening stock, at purchase, less closing stock. But I am adding purchase with the cost of materials consumed. Again, I have to show the purchase of stock in trade. Yes. Now, what is the basic difference between these two is that in the first item, cost of materials consumed means it's a manufacturing concern. Purchase of stock in trade means it is applicable for those concerned who has a trading activity. So purchase of materials is to be shown under cost of materials consumed, whereas purchase of finished goods which you are going to sell, which is ready for sale, is to be shown under purchase of stock in trade. And opening stock of material is to be shown here, whereas opening stock of others like finished goods, work in progress is to be shown here. Opening stock as well as the closing stock. Employees benefit expense, this is clear, that is, it is related to the employees, salaries, wages, provident fund, gratuity, all items will come here. Finance cost, interest on debentures, interest on loans, whatever the finance cost that you have incurred during the year is to be shown here. Depreciations and amortizations, the basic difference between depreciation and amortization is that depreciation is applicable for tangible assets and amortization is applicable for intangibles like patent, trademark, goodwill, all those things. If the items are not coming in above 6 heads, automatically it is to be reflected in the other expenses. Now, students, it may happen that certain items are significant in the viewpoint of the company. You do not want to disclose while drafting the financial statement of a company in other expenses. You do not want to disclose that item in the other expense. So what you have to do, you have to make a special heads, except the item that has been mentioned in the part 2 of schedule 3 of Companies Act 2013. Now, if you compare these two things, okay, you will get profit before exceptional and extraordinary items. Now, the students, one point that is coming into mind, sir, what is exceptional items? What is extraordinary items? That point I am coming to you. try to understand this. Exceptional items are items that are either unusual in nature or infrequent in occurrence. I'm just giving few examples. Profit or loss on sale of non-current assets. You are not selling your assets regularly, so it's an exceptional items. Write down of inventories due to the market fluctuations, the price drops, you are writing down the value of your inventories. Shareholders litigations expenses, reversals of provisions, all these are the examples of the exceptional items. Whereas I'm talking about extraordinary items, extraordinary, so which is not occurred in the ordinary course of business. Like you have incurred a loss on account of natural calamities like fire, flood, earthquake, cyclone, etc. Loss arising from compulsory acquisitions of property by government, loss due to prolonged strike, amount received on one-time settlement or in the court. So all these are the extraordinary items. So exceptional, I just repeat these 2 points. Exceptional items, unusual in nature or infrequent, either unusual or infrequent. Extraordinary items, which does not occur in the regular course of business, which are non-recurring items relating to incomes, gains, expense, and losses. You have to recall the names of exceptional and extraordinary items, because it may happen that in a company final accounts drafting, certain items are there. You have to show that. You have to show in the extraordinary, you have to identify which is exceptional, which is extraordinary. Now, if you consider all these things, you will get profit before tax. Now, on that figure, you have to calculate the current tax. Now, student, deferred tax, which is to be dealt as per the S22, is out of the purview of our syllabus. So just ignore that item. Just for sake of the pro forma, you have to learn this one, deferred tax. Now, after deducting the tax expenses, what you will get? Profit or loss from the continuing operations. With that, if any operation is discontinued, but you generated certain profits from there, you have to show that item after that continuing operations. From there, you have to deduct the tax expenses, excuse me. Then you will get profit for the period from the discontinuing operations. Now, if you add both continuing and discontinuing operations profit, you will get profit for the period of the entity. Now, on the basis of the profit for the period of the entity, and with other factors like number of shares, when such shares were issued, what are the nominal value or face value or paid up value of such shares, you have to calculate the 2 types of earning per shares. One is basic earning per share, one is diluted earning per share. Now, for semester 5 students, diluted earning per share is not within the syllabus. You have to just know how to compute the basic earning per share. You have to learn this diluted earning per shares in the semester 6. One section was there of 15 marks in financial statement analysis, financial reporting and financial statement analysis paper, how to compute the both basic and diluted. Here we have to just understand what is basic earning per shares. Profit for the period divided by number of shares. Okay. Now next that I am coming to the cash flow statement. Now if you see the cash flow statement, you have to see
সৌম্য কিছু ডিস্টারবেন্স হচ্ছে, দেখো তো তোমার আওয়াজ থেকে।
এখান থেকে ডিস্টারবেন্স, এখানে তো কোনো আসছে না, বাইরে কোনো নয়েজ আছে।
ওই ঘ্যার 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 হচ্ছে আওয়াজ। হ্যাঁ হ্যাঁ, ওই না না, নট ক্লিয়ার।
আচ্ছা, জাস্ট আ মিনিট, আই এম জাস্ট চেকিং দিস।
এখন ক্লিয়ার আছে, হ্যাঁ এখন ক্লিয়ার আবার।
এখন ক্লিয়ার আছে তো?
এখন ক্লিয়ার, এখন ক্লিয়ার, হ্যাঁ এখন ক্লিয়ার আছে। ডান।
ওকে ওকে, থ্যাংক ইউ। Just a minute.
Okay, take your time.
Is it okay?
Yeah.
Now the voice is clear, no?
Yes.
Yeah. Now the pro forma of cash flow statement that I want to show here. That's there are three activities that I discussed with you. It's the cash flow from operating, cash flow from investing, cash flow from financing. If you add these three items, you can understand or you can identify what is the net increase in cash, what is the net increase in cash, what is the net increase or decrease in cash and cash equivalent. With that, if you add the opening cash and cash equivalent, you will get the closing balance of cash and cash equivalent. Next pro forma that I want to share with you, that is the statement of changes in equity. You just try to understand this. I'm just depicting few items of the equity: share capital, securities premium, balance in PL, general reserve. If the other reserves figures are there, like capital reserve, capital redemptions reserve, all items should have a separate column. And for what reason they are changing from the opening balance, that is to be reflected. So you have to identify for what reason the opening dates, the opening dates of a financial year is different from the closing date of the financial year. That you have to identify. Nothing else. It's a statement of changes in equity. Students, just I want to share one of the views that this statement of changes in equity, basically this is the first time that has been introduced in the companies of 2013. Before that, no mandate was given for drafting of the statement of changes in equity. Okay. Next, I want to just share my views regarding, as I told you in the inception, just see that this portion is over, components is over. Pro forma of different components of financial statement I also discussed, but how to prepare the financial statement, which is basically the major importance of today's discussions. I will focus only on two items. One is the statement of profit and loss, and one is the balance sheet and its related notes. I want to focus on these items. Okay. So from the discussions onwards, I will not touch any cash flow statement or statement of changes in equity. Okay. Now please come. Just a minute, students. This is the drafting of the PL. What are the items that you need while drafting the profit and loss? Just a minute, students. Now, while drafting the statement of profit and loss, just you have to understand that what are the different components, what are the different components of statement of profit and loss that you have to first identify. Now, if you see, there are primarily three aspects. Number one, revenue related to line items of statement of PL, expenses related to the line items of statement of PL, and profits related to the line items of statement of PL. So what I want to mean, just again I'm coming to my statement of PL format. These are the revenue items, these are the revenue items, these are the expenses items, expenses, and the lower portions is the different profit items. Okay. So my discussions will be restricted to statement of PL. Now, first I have written here revenue related line items under statement of PL. First one is the revenue from operations. As the name implies, it reflects the revenue earned by an entity from its principal operating activities. Depending upon the nature of operations of the company, revenue from operations may be discussed as under. Now, you have to identify what categories of companies. Is it trading, manufacturing, or service rendering industry? Or no, this is a non-finance company. This is a finance company. The company is providing loans, getting interest. This way they are generating their revenue. For non-finance company, I'm just highlighting that there are two components in respect of revenue from operations. Either from the sale of goods or from the rendering of services. Okay, I just want to give you a detailed overview. Just I'm sharing one of my ideas to my students. Tata Motors Limited, they are selling goods like vehicles, different components, accessories, etc. It's revenue from sale of goods. They are providing the post-sale services, and against that they are collecting the revenue from their customers. It's revenue from rendering of services. So what I want to mean, when you are selling the car, it's revenue from sale of goods. When you are rendering the services, it's revenue earned from rendering of services. Like you are providing the services to the customers. Now the third point is coming. What are the other operating revenues, sir? They have received the discount from their supplier. They are selling certain manufacturing scrap. These are the other operating revenues. Now, this is applicable for a non-finance company. If it's a finance company, it includes the revenue earned by a company from rendering of services and other operating revenue. It primarily earns revenue in the form of interest and from other financial services. So, first point, I just want to focus once again, students. While drawing the revenue from operations, you have to understand, is it related to a company who are rendering non-finance business or finance business? If it's a non-finance business, then it has three parts: revenue earned from sale of goods, revenue from rendering of services, and other operating revenue. This is very much clear to you. A company who is providing loans, they are not selling goods, rather they are selling services. Now, after revenue from operations, so revenue has two parts: revenue from operations and other incomes. Now, other income, depending on the nature of operations of the company, it can be revenue other than operating revenue. Such income includes interest income, dividend income, net gain on sale of investment, and other non-operating income like royalties, lease rentals, etc. If you add these two, you will get the total revenue of the concern. If you add these two, you will get the total revenue of the concern. Okay. Is it okay? Professor Lama, is it okay?
Yes, it's okay.
Yeah, my voice is clear, no? Okay,
Yes.
okay. Next. Next part that I am coming, the expenses related to line items under statement of profit and loss. So I am highlighting on these portions. These portions. Now you can see I have mentioned 7 items as per the schedule 3. You can see I can.
স্যার আপনার ভয়েসটা একটু ক্র্যাক করছে মাঝে মাঝে। হ্যাঁ এখনো আওয়াজ আসছে না। আসেনি না। আনমিউট করুন। Unmute, sir. Please unmute.
Is it okay right now?
Yeah, now it is okay.
It's okay now. No. Now, students, I just need your attentions once again. It's the expense related to the items. Now you just see there are 7 items. There are 7 items. First one, I just want to draw your attentions. Cost of materials consumed. This item of expense related to the raw materials, as I mentioned earlier. Other direct materials consumed in the manufacturing process and primary packing material, if any. It is applicable for manufacturing company only, and it is ascertained as opening balance plus purchase less closing balance of material. So this is very much clear to me that if it's a manufacturing concern, then the first item only to be appeared. If it's a trading concern, the first item will not appear. Second item is the purchase of stock in trade. Stock in trade refers to the goods that are purchased with the intention of reselling. It is applicable only for the trading companies, and the net aggregate cost of such goods purchase is reflected under the line items. Third one, changes in inventories of finished goods, work in progress, and stock in trade. The phrase change in inventories refers to difference between opening balance and closing balance of inventory. Mathematically, for the purpose of statement of PL, changes in inventory equals to opening balance less closing balance. Such difference should be disclosed separately for finished goods, work in progress, and stock in trade. The value of the line items may be either positive or negative. If the opening balance is low, closing balance is high, it's a negative figure. So students, just try to understand one thing. In statement of PL in balance sheet does not necessarily mean all the items will come as a positive figure. Certain negative items may also come. The figure with a negative sign may also come. Next, employee benefit expense. What does it include? It includes wages. I'm coming to the fourth one, employee benefit expense. Wages. It may be direct, it may be indirect. Salaries, bonus, directors' remunerations, leave encashment paid, staff welfare expenses, expenses on employee stock option scheme, expense on employee stock purchase scheme, contribution to employees benefit fund, namely provident fund, gratuity fund, superannuation fund, etc. All the details of employees benefit expenses, if such details have been given, are to be reflected in the notes. The term employee should deem to include director of the company, either full-time or part-time. However, few items are not to be considered as employee, and its payment to them and the payment to them are not to be considered. Director who attend only board meeting are not under the contract of service with the company. The director who act as a consultant or advisor are not to be considered here. Payment made in the above two cases are not reflected under the line items, and all the payments made to them, like director fees, are to be shown under other expenses head. Next, finance cost. Now, it is to be classified as interest expense, dividend on cumulative preference shares, foreign exchange difference, other borrowing cost. Interest on borrowings from banks, other financial institutions, interest on debentures, bonds, or similar instruments, interest on public deposits, etc., are to be considered here. In case of other borrowing cost, underwriting commissions, expense on issue of debentures written off, loss on issue of debentures written off, premium on redemptions of debentures written off, commitment charges, loan processing charges, guarantee charges, loan facility charges, other ancillary costs incurred in connection with the borrowings are all to be considered here. Next one, depreciations and amortizations. As I told you, it is applicable for property, plant and equipments. If it's a tangible assets, it's depreciation. If it's intangible, like goodwill, patent, trademark, copyright, brand, it's to be considered as amortizations. Now, the items which has not been considered in this 6 line items rather, they are to be considered as other expenses. I'm just giving few examples of other expenses. Consumption of indirect material, power and fuel, carriage freight, inwards as well as outward, manufacturing productions factory expense, rent including lease rent, goods and service taxes, customs duty, insurance premium, bad debts, discount allowed, commissions, trade expenses, director fees, postage and courier charges, underwriting commissions, repairs and maintenance, miscellaneous, sundry general expense, all items has been considered here in other expense. Now the next part, students. So I have covered 2 items. First one, revenue from operations. Second one, expense. Third, profit related to line items on the statement of PL. Now the profit related to line items, you have to first identify or compare the revenues and expenses. By comparing, you will get profit before exceptional and extraordinary items and tax. So I just repeat the word, profit before exceptional, extraordinary items and tax. Excuse me. Now, profit before extraordinary items, exceptional, extraordinary items and tax has been arrived at by comparing the total revenue with the total expenses. Now, first you have to calculate what are the items that are exceptional in nature. If you adjust that item, you will get profit before extraordinary items and tax. As I discussed already, that what is extraordinary and what is exceptional items. If profit before extraordinary items, you deduct the extraordinary items, or rather adjust the extraordinary items, you will get the profit before tax. Now, you have to calculate profit and loss for the period from continuing operations by calculating the amount of tax. It's both current year tax and deferred tax. And for sake of your syllabus, you no need to consider the deferred tax. Next, profit and loss for the period. How you can calculate? Just by deducting the tax amount. And after considering the profit from continuing operations and profit from discontinuing operations, you will get the total profit for the period. By considering the profit for the period with the number of shares, paid up share capital, you will get the earning per shares. This is items of PL. Now I am coming to the items of balance sheet. Now, as we already reflected, already know how to balance sheets has been drafted. There are 2 tiers, I told you. In the first tier, that is the equity and liabilities tier. In the equities and liabilities tier, there are 2 parts. Number 1, the owner's capital and internally generated capital of the company, that is the equity. And also the claim of the external parties of the assets of the company, that is the liabilities. So in the upper tier equity liability, first show the equity part, second part is the liability part. The second tier, namely asset, represents the resource owned and controlled by the company. Resource owned and controlled by the company. Okay. So these are the 2 things. Next, my objective is to what are the different heads of the balance sheet. Just you see, it's shareholders fund, share applications money pending allotment, non-current liabilities and current liabilities. Now, students, I'm repeating these things once again to you, that in the balance sheet, there are, in the equity liabilities tier, there are first you have to show shareholders fund. Second one, share applications money pending allotment. Third one, non-current liability. Fourth one is the current liability. In the asset tier, there are two heads. One is non-current assets. Second one is the current assets. We have already discussed what are the different components of current and non-current assets. Now, I just need your attention, students, regarding this. Please go through these portions. This one, that's I have classified this under four heads in the equity and liabilities tier. First one is the shareholders fund. Second one is the share applications money pending allotment. Third one is the non-current liability. Fourth one is the current liability. In the asset tier, there are two heads: non-current assets, current assets. Now, students, I just mentioned this. Please, I need your attentions here. It is the property, plant, and equipment. What I am telling you, as per the amendment to Schedule 3 made by the Ministry of Corporate Affairs, Government of India on October 11, 2018, the name has been replaced. The name fixed assets has been replaced, and we are using the word property, plant, and equipment in place of fixed assets. Now, I'm coming to discuss one by one items. of this. First one is the share capital. Now, what items that you are going to disclose regarding the share capital? Just try to understand this. Number of shares authorized to be issued, number of shares issued, face value of shares, called up value per shares, paid up value per shares, calls in arrear, forfeited shares, issue of shares other than cash, number of bonus share, number of shares bought back. Just try to, I'm just going to identify one items that you have to show the calls in arrear here, but calls in advance is not to be reflected in share capital. Second one, reserves and surplus. There are different components of reserves and surplus. It may be capital reserve, it may be capital redemption reserve, it may be securities premium, it may be debentures redemption reserve, it may be revaluation reserve, it may be share option outstanding, etc. But few points that you have to keep in your mind: a reserve that is specifically represented by the earmark investment shall be termed as fund. Debit balance of statement of profit and loss shall be shown as a negative figure under the head surplus. These 2 points are to be keep in your mind. The balance of reserve surplus after adjusting the negative balance of surplus, if any, shall be shown under the head reserves and surplus, even when the resulting figure turns out to be negative. Okay. Next point that I am coming: money received against share warrant. Money received against share warrant. These points. A share warrant is a financial instrument which gives the holder a right to acquire equity shares. Since shares are yet to be allotted against such share warrant, these are to be disclosed separately under shareholders fund. Okay. Next one that I am coming: share applications money pending allotment. It represents the applications money received on shares for which allotment is not yet made. That is, shares are pending allotment. What you have to show regarding this? What are the terms and conditions of this allotment? How many number of shares proposed to be issued? What's the amount of premium, if any? Period before which shares are allotted. Interest accrues on amount due or refund, etc. Non-current liabilities. Next I am coming. Third one. Non-current liabilities are those liabilities that are not current liabilities. It's simple words: the liabilities that are not expected to be settled within the company's normal operating cycle, nor are due for settlement within 12 months from the reporting date, are to be reflected under this head. I'm just giving an example to you. Suppose a debentures has been issued in the year 2015. You are drafting your financial statement on 31st March 2022. No need to see when such debentures were issued. Rather, you have to see when such debentures are redeemed. If such debentures are redeemed within the next financial year, it is not to be reflected under non-current liabilities. If such debentures are redeemed within next financial year, it is to be reflected under current liabilities. So if you purchase any goods on credit and you are going to pay the amount to such party after 12 months, then this is not to be reflected under non-current liabilities. Sorry, under current liabilities, rather under non-current liabilities. I'm purchasing the goods. Today is the 12th December, okay, 2022. I'm going to pay to the party 12 December 2024 while drafting the balance sheet for 31st March 2023. As this has not been paid within one accounting period, 12 months, so it is to be shown under non-current liabilities, even though they are my trade creditors. Like this, so you have to understand, if any loans, if any debentures, if any borrowings has to be settled down within one accounting period of 12 months, then it is to be termed as current liabilities. It is to be reflected as current liabilities. It is not to be shown under non-current liabilities. Now, there are different bonds, debentures, terms loans, from terms loans from banks, deferred payment of liabilities, deposits, all maybe are within the purview of the long-term borrowings. I just repeat the point once again because students, this is very important for sake of your examination. Current maturity of any long-term borrowings should be disclosed under other current liabilities, not under long-term borrowing. I repeat the point. Current maturity of any long-term borrowing should be disclosed under other current liabilities, not under long-term borrowings. Now, I do not want to concentrate on the deferred tax. Deferred tax, this is not under the purview of your syllabus. I'm just going to the other long-term liabilities. As I discussed with you, if I purchase any goods on credit from any person to whom I am going to pay the amount on such a date which is more than one accounting period from end of the financial year when I am drafting my balance sheet, it is to be termed as other long-term liabilities. Dues in respect of statutory obligations like contributions to provident fund, purchase of fixed assets, interest accrued on trade payables, etc. are reflected as other long-term liabilities. Long-term provisions. Provision for employees' benefits relating to liabilities obligation that fall due beyond 12 months from the balance sheet date, namely provision for gratuity, provision for pension, provision for staff welfare fund, etc. These are to be shown under long-term provisions. Next one is the current liabilities. I just want to define the current liabilities. It is as per the these definitions that I want to use, because otherwise it's not possible for you to understand, to bifurcate the liabilities between current and non-current, because while defining non-current I told you which is not current, so I have to understand what is current. I'm mentioning 4 points. If any liabilities are satisfied in any one of the 4 points, it's a current one. It is expected to be settled in a company's normal operating cycle. It is held primarily for the purpose of being traded. It is due to the settle within 12 months after the reporting date. The company does not have any unconditional right to defer settlement of the liability for at least 12 months after the reporting date. Terms of liability that could, at the option of the counterparty, results its settlement by issue of equity instrument do not affect the classifications. Next, short-term borrowings. Under that, I am coming to short-term borrowings. I'm giving few examples to you. Loan from banks. It is the short-term borrowings. Loan from banks. Deposits. Loan from other parties repayable on demands. Other loans and advances. All are to be termed as a short-term borrowings. In respect of short-term borrowings, you have to disclose which are secured one, which are unsecured one. Any loss that are guaranteed by the directors are required to be disclosed separately. In case of any default on repayment of any such loan and interest, the period and amount thereof as on the balance sheet date must be specified. Trade payables, it's a very common items. It includes creditors and bills payable. Other current liabilities, current maturity of period of the long-term debts, current maturity of the finance lease obligations, interest accrued but not due on borrowings, unpaid dividends, unpaid mature debentures and interest accrued thereon. All these things are to be shown under other current liabilities. Next one, the last one of the equity liabilities tier, that is the short-term provisions. This represents money set aside for meeting short-term obligations and shall be classified into provision for employees' benefit expenses and other provisions. I am giving provisions for employees' benefit expense if this is due within one account within 12 months from the balance sheet date. Other provisions, you have to mention the natures like provision for taxations, provision for warranties, etc. Now, next I am coming to the assets. These are the assets portion. Now, first I am reflecting the property, plant and equipment. Now, what the items you have to show? These are the tangible items of non-current assets are held for. In intangible assets, first you have to show that have a physical form. In other words, assets can be seen, touched or felt. As per the requirement of the Schedule 3, details of tangible assets should be reflected in the notes to accounts and classified as land, building, plant and machinery, furniture, fixture, vehicles, other equipments, others. Intangible assets. Intangible assets refer to assets that do not have any physical substance. In other words, such assets cannot be seen or touched. As per the requirement of Schedule 3, details of intangible assets should be reflected in the notes to accounts, and it is to be classified as goodwill, brand, trademark, copyright, computer software, mining rights, etc. Now, I just want to draw your attentions regarding this. On additions of property, plant and equipment, on disposal of property, plant of equipment, on acquisitions of property, plant and equipment, through business combinations and other adjustment of property, plant and equipment, a reconciliation statement is to be further drafted. As business acquisition in your syllabus, while drafting the balance sheet, just think that if the question setter may ask you to make a reconciliation statement of property, plant and equipments. Okay. Next point that I am coming to, the capital work in progress. You just match up between these two. The first one is the tangible, second one is the intangibles. Now, if the tangibles is under progress, building has not been developed totally, then in that case it is to be shown as the capital work in progress. When a company develops a tangible non-current assets, but the development process is not yet complete as on the date of the balance sheet, such non-current assets is referred to as capital work in progress. In simple words, capital work in progress refers to those tangible non-current assets that are in process of development, that is, work on them are still in progress. Examples: new building of a company that is under construction. Intangibles, intangible assets under development. It may happen that you are developing any software that is not entirely finished. In that case, it is to be shown under intangible assets under development. When a company develops or gets developed an intangible non-current assets, but the development process is yet to be completed as on the date of the balance sheet, such non-current assets is referred to as intangible assets under development. For example, new ERP system of a company that is under development. Next point, non-current investment. Now, in case of a non-current investment, what you have to show, that is the investment, whether it is in equity or in preference shares or in government or trust security, or in any debentures, or in any mutual fund, or in any partnership firm, you have to show here. Investment made by a company which are not intended to be disposed within the next 12 months from the reporting date are referred to as non-current investments. Okay. In respect of non-current investment, the aggregate amount of quoted investment and market value thereof, the aggregate amount of unquoted investment that is not listed, the aggregate provisions for diminutions in the value of investment are to be disclosed properly. Next one is the long-term loans and advances. That means you are providing the loan. The company is providing loans and advances. Besides its core business, they are providing the loans. The loans and advances given by a company which are not expected to be realized within 12 months from the reporting date are referred to as long-term loans and advances. For examples, advances given for procurement of fixed assets, loans to directors, officer, employees, security deposit with electricity company or telephone company are to be disclosed here. Other non-current assets. I am just highlighting on the other non-current, other. This one is the other non-current assets. What you have to show here? The subhead includes those assets which happen to be non-current in nature, but are not covered in any one of the preceding subheads. For example, discount on issue of debentures, underwriting commissions, share issue expenses are to be shown here, which are to be written off beyond 12 months from the balance sheet date. Next one is the current assets. Next broad heading is the current assets. Under current assets, first item is the current investment. It's an investment which is not non-current in nature, is current investment. It may be in equity, it may be in pref, it may be in government securities, it may be in debentures, it may be in mutual fund, it may be in partnership firm, anywhere. It is to be reflected here. In case of current investment, the basis of valuation of investment is to be shown. Aggregate amount of quoted investment and market value thereof are to be shown. Aggregate provisions made for diminution in the value of investment are also to be shown. These are the facts are to be shown. Inventories. Basically, inventories, it may be raw material, it may be work in progress, it may be finished goods, it may be stores or spares, it may be loose tools, it may be others. These are to be reflected in inventories. Goods in transit, if any, shall be disclosed under the relevant subhead or inventory. Moreover, the mode of inventories, inventory valuations are to be reflected. Is it in LIFO? Is it in FIFO? Is it in weighted average? If there is any change in method of valuation of inventory, then for what causes you are going to change it, that are to be reflected. Next, I am coming to the trade receivables. In respect of trade receivables, you have to see whether such receivables are due or outstanding for a period of 6 months or more or not. It is to be classified into two parts: period receivables exceeding 6 months, other receivables. This way you have to show in the balance sheet. If against such receivables any provisions are there, if any debts due by the director or other officer of the company, that are to be reflected separately. Next one is the cash and cash equivalent. Cash equivalent means which can convert into cash with a minimum risk. Balance with bank, cash on hand, checks draft, others are to be, others means I am talking about treasury bills, are to be reflected in cash and cash equivalent. Next one is the short-term loans and advances. Now, under short-term loans and advances, you have to show different items. If any loans and advances given by a company which are expected to be realized within 12 months from the reporting date, I am highlighting on the words 12 months many times. The student try to understand this. On the basis of that fact, many adjustments may come in the examinations. It includes advance tax, it includes tax deducted at source, GST credits, receivables, etc. Loans and advances due by the director, other officials of the company, of the or any of them are to be disclosed separately. Last item, other current assets. This is all inclusive heading, while incorporate current assets that do not fit into any one of the preceding assets category. For example, prepaid expenses, share issue expense, underwriting commission, discount of issue of debentures, etc. to be written off within a period of 12 months from the balance sheet date. Now, this is all for the items of balance sheet and statement of PL. Now, the main portions that I want to come once again, that is how you are going to draw this. Now, you just try to understand this. There are 4 items that you have to prepare. One is a statement of PL, notes to statement of PL, balance sheet, notes to balance sheet. These 4 items are to be drafted. This is point number 1. Next one. What informations will give you in the examinations? Either the ledger balances is given or a trial balance will be given. Now you have to understand which item will come under which tier, which head, which subhead, which line item. This you have to learn. And whatever the additional informations are given in the questions, it has 2 parts. Either it is for the disclosure purpose or it is for the adjustment items. So, if any information is appearing in the additional information, it does not necessarily mean some entries are to be passed while drafting the financial statement. It may be relating to the disclosure, it may be related to the adjustment. If this is related to the disclosure purpose, then it will not affect the face of the balance sheet or face of the statement of PL. If these are related to adjustments, it will affect the face of the balance sheet. So these points that you have to keep in your mind. I repeat the point. Certain ledger balance will be given or trial balance will be given. What you have to learn, that such item will appear whether in SPL or balance sheet, under which heads, under which subheads, under which line items. In additional information, there are 2 parts. One is for the disclosure purpose, one is for the adjustment purpose. Whether this is for the disclosure, it will not affect the face of the balance sheet. If this is for the adjustment purpose, it will affect the face of the balance sheet. Now, my intention is to discuss all these things. I'm giving few examples of the disclosure items. Now, authorized or registered share capital. It is to be disclosed in the notes to balance sheet. Market value of the investment. It is to be reflected in the balance sheet or notes to balance sheet along with the cost of the concerned investment. If any amount dues for 6 months from a debtor, total balance of debtors as in the balance sheet date is to be splitted into debtors due that more than 6 months and other debtors in notes to balance sheet or trade payables. Balance with scheduled bank. Total bank balance as on the balance sheet date is to be splitted into balance with scheduled bank and balance with non-scheduled bank in notes to balance sheet on cash and cash equivalents. Now, these are the few examples of the disclosure. Now, I'm giving few examples of the adjustments. Stock intro in the balance sheet. Firstly, it is to be considered in the SPL under expenses for ascertaining the changes in inventories of stock in trade and reflected under the particular notes to SPL or changes in inventories of stock in trade. Thereafter, in balance sheet as current assets under the head inventories. Outstanding expenses. Firstly, reflected under notes to SPL on employees benefit expenses. Like I'm considering that suppose certain employee salaries are outstanding. So it will be to be considered as employees benefit expenses. Again, it will come under the other current liabilities. Depreciations on tangible assets. You can understand the journal entry for depreciation is depreciations account debit to assets account. It may be to plant, to furniture, fixtures, to motor vehicles, etc. Now, on the one side, depreciation will come in the SPL. On the other side, it will come under the property, plant, and equipments. If it's amortizations, it will come under tangible assets. Just a minute, it's a intangible. Next, provisions for doubtful debts. It is first considered in the SPL under other expenses and reflected under the particular notes of SPL. Thereafter, in notes to balance sheet as a deductions from the balance sheet from debtors under notes on trade receivables. Now, these are the additional informations. So either disclosure item or adjustment items. Now, how to post the item of the different ledger balance? I'm just giving few examples. In what way you have to learn this? You have to identify in which financial statement it is coming. Is it in the statement of PL or is it in the balance sheet? If it's a balance sheet, under which tier it's coming? Is it in the asset tier or is it in the equity and liabilities tier? You have to identify the heads. I mentioned different heads. You have to identify the different line items or subheads. This way you have to learn. So your target will be you have to identify the items of income, expense, gains, loss, assets, liabilities, equities. First, identify in which financial statement it is coming. If it is balance sheet, then you have to identify under which tier it's coming. If it's related to the financial statement, that is statement of PL, no question of identifying the tier in that case. You have to identify under which head it is coming. Then you have to see under which subhead it is coming. Then you have to see under which line items it's coming. I've given few examples here. This is raw material, purchase of raw materials, all these things. Few items I have considered, considering the ledger balance as having debit balance and credit balance. I have considered few items. Now, last portions that I want to discuss for today's class, few adjustments regarding the corporate financial statement, which is required for your examinations. First, closing balance of inventories. It is given in the adjustment. What is the treatment for the closing balance of inventories? First, you have to see this closing balance is related to raw material or this closing balance is related to the finished goods or work in progress. If this closing balance is related to the raw material, then it is to be reflected in the, is related to any items, it is to be reflected in the balance sheet. But if this closing balance is related to finished goods or stock, it will come in the statement of profit and loss under the changes in inventories. If this is related to raw material, it is to be come under the head raw materials consumed. I repeat the point. I'm talking about closing balance of inventories. If this item is related to finished goods or fresh stock in trade or work in progress or raw material, it will come in the balance sheet irrespective of the nature of the inventories. But if these closing inventories are related to raw material, then it will come in the changes of inventory. Whereas if this is related to finished goods or stock or work in progress, it will come in the changes in inventory. If this is related to the raw material, it will come under raw materials consumed. Next point, revaluation of loose tools. loose tools happen to be the component of inventories of a company. On its revaluation, the difference between opening value of loose tools and closing value of loose tools is to be ascertained. And thereafter, any of the following two situations can arise. When opening value of loose tools greater than the closing value of loose tools, it represents the loss on revaluations of loose tools or consumption of loose tools. While opening value of loose tools less than the closing value of loose tools, it represents gain on revaluations of loose tools. In SPL, under expenses, the revaluation of loose tools is to be reflected as a separate line items after changes in inventory. So I am giving an example where the line items has not been mentioned in the Schedule 3, Part 2 of Schedule 3. In balance sheet, it is to be shown under the inventories, assets, current assets, inventories. Next one, provisions for bad and doubtful debts. You know that the journal for provisions for bad and doubtful debt is PL account debit to provisions for bad and doubtful debt. In statement of PL, it is to be shown under expenses, other expenses. In balance sheet, it is to be deducted from trade receivables, rather from debtors in the notes to balance sheet. Tax deducted at source on expenses. If any tax has been deducted at source, what is the journal? Expense account debit to bank account to TDS payables account. Expense account debit to bank account to TDS. Now, if this TDS is appearing in the credit column of the trial balance, that means it is not given in the adjustment. What you have to do, in SPL, gross amount of expense is included within the expenses under the relevant line items. In balance sheet, net amount paid has already been deducted from bank balance. So no further treatment is required. And TDS payable is to be reflected in current liabilities under the subhead other current liabilities. However, if TDS is not appearing in trial balance, so you have to pass the entry expense to TDS payable. The gross amount of expense is to be ascertained by adding TDS amount to the net expense. Thereafter, such gross expense should be included within expenses under the relevant line items. In balance sheet, TDS payable is to be reflected in current liabilities under the subhead other current liabilities. So students, just I draw your attention here that the in SPL, it is to be only reflected when it is shown in the adjustment. If this has been given in the trial balance, the expense account has already been adjusted. So no further entries to be done in the expenses in the statement of profit and loss. Tax deducted at source. I am earning certain tax. I am earning certain incomes on investment. The banks has deducted the tax. What is the journal? Bank account debit, TDS account debit to income. Particularly, it may be interest, it may be royalty, etc. If it is given in the trial balance, such TDS, in that case, it is to be reflected in current assets under short-term loans and advance. If it is not appearing in the trial balance, then you have to pass the entry TDS to income to effect. Number one, it is to be shown as a TDS. In SPL, gross amount of income is to be ascertained by adding the TDS amount to the net income. Thereafter, such gross income should be included within total revenue. In balance sheet, TDS is to be reflected in current assets under short-term loans and advances. Note, the net amount received has already been included with bank balance and hence no further accounting is required. So next part that I am coming here, just a minute. Payment of interim dividends. The dividend is declared and paid by the company during an accounting period is referred to as interim dividend. It is said to be dividend paid any time between two AGMs. In such a case, two situations may arise in different problems. When interim dividend is appearing in the trial balance, you paid the dividend, it is appearing in the trial balance. What is the journal? Interim dividend to bank. Now, please, I need your attentions. No entry is required to be made in SPL. No explicit entry is required to be made in balance sheet. In notes to balance sheet, it is to be shown in notes to balance sheet. Specifically, the items are required to be deducted from surplus in the notes on reserves and surplus. So, interim dividend will not appear in the profit and loss account. Will not appear in the profit and loss account. Next, if interim dividend paid has not been recorded and is provided as additional informations, so you have to pass the entry surplus account debit, reserves account debit to interim dividend account debit to bank. In such a case, interim dividend is to be shown under the surplus and it is to be deducted from the bank balance. It is to be deducted from the bank balance. One more thing, students, if the dividend has been proposed but not paid, it is not to be reflected in the face of the balance sheet. Rather, it is to be shown as a disclosure item. Such dividends may be paid by the equity share, may be paid by the equity shareholders, may be paid to the equity shareholders as well as to the preference shareholders. When capital structure of a company has outstanding preference shares, then company must declare pref dividend before declaring equity. What's its treatment? I'm coming to that point. Even though it is an appropriations of profit, it is not deducted from current period surplus or any reserves in the notes to surplus. Rather, it is to be shown as a separate note under notes to balance sheet. So proposed dividend will not come on the face of the balance sheet. It is only to be reflected in the notes to balance sheet. What's the amount of share capital? You are declaring what percentage of dividend. Just on the amount of paid up share capital, you just make the percentage and reflect that item in the notes to balance sheet, not in the face of the balance sheet. Next, I'm just coming to the last discussions topic of today. That is the provisions for income tax, advance tax, assess tax of the prior year. Now, what you have to do, there are three items that you have to understand. What is current income tax? What is the preceding year's tax that you have provided and paid? These three facts. Preceding year's tax paid and provided, and what is the current tax? Now, students, you know that as you have already completed your semester 4, that the tax has to be paid on advance basis to the income tax departments, to the government. Now, it is to be ascertained at first. It is to be paid in the year itself, but it is to be assessed in the next year. As it is to be assessed in the next year, and you are paying for that year in the current year, it's an advance tax. Now, students, how to treat that in the financial statements? Now, first, your journal entry is the profit and loss account debit to provision for income tax. Now, it may happen whatever the tax that you have paid in the preceding year is not sufficient, which has been assessed by the income tax department, or which is more than sufficient, which has been assessed by the income tax department, or which has been at par with the income tax department. Now, what I have written here different situation. First one is the situation 1, when assessed tax liability, that is equals to provision for income tax. That means whatever amount of provisions that you have created in the preceding year, same amount has been assessed by the income tax department. Now, just try to understand this. I paid 1 lakh rupees. I provided 1 lakh rupees. Income tax department has assessed at 1 lakh rupees. So in that case, what you did in the preceding year, when you paid the amount in the preceding year, you have passed the entry advance tax account debit to bank. You make a provisions profit and loss account debit to PFIT. Now, this has been settled down. what you have to do, whatever the advance tax you have to pay that was appearing in the balance sheet, that is to be cancelled out. Whatever the provisions that you have created that was sufficient, that is once again to be cancelled out. So what is the entry for that? What I have written here, just see, no further PFIT is required to be created, nor is anything to be written back. This is the point number 1. Now, if the assessed tax liability is more than the amount you have provided earlier, in that case, you have to provide the further provisions. What is the journal? PL account debit to provision for income tax. Now, what you have to do, this further PFIT will appear under line items, expense as prior period tax. So what I am telling you, that PL account debit to PFIT, this entry is to be passed because the sufficient provision has not been created in the earlier year. That's why further provisions are going to be created. That is PL account debit to PFIT. If the sufficient provisions was created, more than provisions was created, then you have to reverse back. Provision for income tax account debit to profit and loss account. This further PFIT will appear under the line item tax expenses as prior period expenses, prior period excess provisions. So first what you have to do, first you have to check how much provisions was created, number 1, and how much amount has been assessed by the income tax department. If this is at par, no further entry is required. If this is less than the amount required by the income tax department, you have to show as an expense under the head tax expenses. If this is more than the provisions which has been created, then it is to be reversed back, it is to be shown as a negative item. Now, under this fee, there are 3 alternatives. You paid the assessed tax, you did not pay the amount of assessed tax insufficient, you paid more than the assessed tax. Now, just think about this. If you paid excess amount of tax, that is, income tax department required 1 lakh, you paid 1,50,000. So in that case, 50,000 will be refundable. And if the 50,000 is refundable, it is to be shown as IT refund. And it will appear under the current assets under the head other current assets. Okay. If this amount is not sufficient, whatever amount that you paid in the preceding year is not sufficient, which has been assessed in the current year, in that case, you have to pay more taxes. So in that case, what you have to do, the additional amount which you are going to pay is to be shown as income tax payable and will appear in current liabilities under the subhead other current liabilities. Moreover, whatever the amount required is equals to the amount that you paid. Whatever the amount assessed by the income tax department, that is the amount you have already paid. So no further entry is required here. So on that basis, I have classified this into 3 parts. Okay. If this is equals to assessed tax liability, if this is more than equals to assessed tax liability, if this is less than equals to assessed tax liability. Now, provision for income tax and advance tax of the current accounting year. Just try to understand, your journal is PL account debit to PFT for payment of for making the provisions, and for payment of tax your journal is advance tax account debit to bank. So what I am telling you, whatever the provisions that you have created in the current year is to be shown under statement of PL. Whatever the advance tax that you have paid, it is to be shown under the heads advances, short term. First of all, whatever the provisions you have created is to be shown under short term provisions, provision for income tax. If there are more items under short term provision, then it is to be reflected in the notes to balance sheet on short term provisions. And in the balance sheets, whatever amount of advance tax paid is to be shown as a short-term loans and advance as advance income tax. Now, these are the items you need more disclosure. whatever amount you are paying to your auditors, because auditing is a very important factors while you are considering the audit of a financial statement. So for what reason you are paying to your auditors, that have to be disclosed. You have to disclose regarding the authorized share capitals. You have to disclose regarding the market value of long-term investment. You have to disclose regarding the classifications of debtors. You have to disclose regarding the bank balance lying with the scheduled banks. Now, thanks to all of you. I think this is end for today's discussions from my side. If you have any query, any doubts, you can raise your questions through different links. Any queries, any doubts? Ronak, any questions are coming in YouTube's?
No, sir.
No. So I think this is all for today's discussions. Professor Lama, is it all okay?
Yes, sir. Romit sir will give the vote of thanks. Romit sir.
Okay. So I think I'm audible, right?
Yes, sir.
Hello?
Yes,
Okay.
sir.
Yeah, audible.
Okay, thank you. So a very good evening once again from my side. I personally convey my heartfelt thanks to Professor Soumya Mukherjee for his very lucid, very effective presentation. And I am personally sure of the fact that his presentation will definitely benefit the stakeholders, the students for whom our society has organized this particular program. So this is the end of the first day. We will definitely come back tomorrow with another resource person. While I thank the organizing committee, I once again extend my thanks to Professor Soumya Mukherjee for this wonderful presentation from my side, as well as on behalf of the society. Thank you so very much.
Welcome. I'm also
Thank you,
thankful
sir.
to the society once again.
Thank you,
Thankful to
sir.
Professor Lama for providing me the opportunity. And I should be thankful to my technical teams, which is led by the Ronak. Okay, thanks to all of you. Okay, thank you. Thank you.
Thank you, sir. Good night, sir.
Good night.
Good night, sir.